XRP is sitting at $2.18, holding firm after a volatile 48 hours that saw both panic selling and silent accumulation spike at the exact same time. Meanwhile, HBAR is hovering around $0.1514, slowly clawing its way back from last week's dip like a heavyweight fighter standing back up in the 12th round. But this isn't just market noise. It's not just volatility. It's a distortion field, the kind that hides the real play until it's already over. Because behind these seemingly modest price tags lies a storm. A fundamental shift is happening. And 90% of holders, they don't even see it yet. Everyone's glued to the next meme coin chart. Everyone's chasing pumps. But while the herd is distracted, the financial rails of the next decade are being laid down in real time, and two assets are sitting at the center of it: XRP and HBAR. And here's the truth most don't want to hear. If you're still treating XRP like it's only a lawsuit recovery story, if you're still thinking HBAR is just a sleeping enterprise coin with no hype, you're already missing the bigger picture. Because this is no longer about speculation. This is about infrastructure, about global compliance, about the actual plumbing of programmable finance being installed while the rest of the market sleeps. Institutions, they've noticed. Governments, quietly flipping their stance. And utility-first blockchains like XRP and HBAR, they're finally being plugged in behind the curtain. This moment right here, this price action you're seeing, it's the calm before a policy-backed, regulation-fueled, utility-driven storm. Not a hype pump, a structural rewrite of how value moves. So if you're holding XRP, if you're holding HBAR, then you need to pay close attention, because the shift is happening whether you're ready or not. Let's get into it. And if you're serious about staying ahead of the herd, hit that subscribe button now, because what you're about to see could give you the edge most investors won't even realize they needed, until it's already too late. Let's make one thing clear from the jump. XRP and HBAR are not meme coins. They're not here for the quick dopamine hit. They're not built on hype. And they're definitely not following Pepe, Doge, or whatever flavor of the week token is trending on X. In fact, if you're comparing XRP or HBAR to coins chasing social virality, you're fundamentally missing what these projects are actually doing. Because these two tokens exist in a completely different weight class. They are not competing with each other. They are converging on the same endgame: to become the invisible backbone of global finance, enterprise operations, and programmable value. And here's the key nobody's talking about. XRP is building the rails. HBAR is building the logic that rides on top of them. Let's break it down. XRP, the global liquidity network. XRP isn't just some altcoin looking to trend on CoinMarketCap. It's the settlement layer, designed specifically to move trillions of dollars worth of value across borders, instantly and cheaply. It's integrated with over 70 financial institutions via RippleNet. Already ISO 20022 compliant, putting it in direct alignment with the messaging standards used by central banks and clearinghouses globally. Running live corridors for on-demand liquidity (ODL) in Latin America, Europe, Asia, and the Middle East. This is real utility. When a bank in Singapore wants to send value to Brazil, XRP is increasingly the neutral bridge asset facilitating it. Not just in theory, in production. HBAR, the enterprise infrastructure layer. Now flip the lens. HBAR isn't trying to be Bitcoin. It's not trying to be Ethereum. It's not even trying to be a layer 1 hype train. It's the enterprise-grade consensus engine for governments, corporations, and systems that can't afford to fail. Here's what HBAR is quietly powering: supply chain authentication systems that track goods from origin to destination, carbon offset tokenization for ESG-compliant industries, CBDC pilots and regulated token frameworks with real financial institutions, and soon tokenized asset settlement through stablecoin infrastructure and real-world asset (RWA) standards. Hedera's governing council, which includes Google, IBM, LG, Boeing, Dell, and Standard Bank, isn't just a list of investors. They actively run nodes, propose upgrades, and shape the future of how this infrastructure evolves. This is permissioned decentralization at scale, and it's already live. Now connect the dots. Here's where the magic happens. XRP moves money instantly across borders with no intermediaries. HBAR validates that movement, layering in identity, compliance, asset metadata, and enterprise-grade logic. That's not a coincidence. That's infrastructure convergence. And it's accelerating. Banks need scalable value movement, XRP. Enterprises need verifiable, efficient smart contract infrastructure, HBAR. And in the next wave of institutional blockchain adoption, those two pieces are going to fit together like puzzle pieces. Not by hype, not by marketing, but by design. Recent proof of acceleration. Let's talk recent moves, because they're not being covered in mainstream crypto media. Ripple's acquisition of Medico and expansion into credit networks opened new doors for institutional custody, DeFi collateralization, and liquidity routing, all using XRP as the bridge asset. Hedera's governing council approved a wave of new integrations tied to tokenized assets, digital identity, and even stablecoin frameworks built for full KYC and enterprise interoperability. Behind the scenes, joint conversations are emerging at industry panels and standardization forums, where both Ripple and Hedera are showing up to the same tables. ISO committees, WEF initiatives, CBDC task forces. That's not accidental. That's alignment. Why this matters? Most people are stuck asking, which one's going to pump harder? Wrong question. The real question is, which of these assets is going to be unavoidable in the global financial stack 5 years from now? And the answer just might be both. XRP provides the speed, neutrality, and liquidity access that traditional finance desperately needs. HBAR provides the logic, compliance layers, and institutional tooling that new finance can't operate without. They don't overlap. They complement. This isn't tribalism. It's macro strategy. If you're holding either XRP or HBAR right now, understand what you're really holding. Not a speculative token, not a short-term play, but a piece of the underlying framework that real governments, central banks, and Fortune 500 companies are already testing behind closed doors. And if you're paying attention, you're early. Because once this convergence goes public, you won't be able to buy in at these prices again. Let's keep going. Let's zoom out, way out. Because while everyone's obsessing over 4-hour candles and daily RSI levels, the real moves, the ones that reshape portfolios, are being made on the macro timeline. And right now, we're sitting on the edge of a moment that history tells us doesn't come around often. Bitcoin just halved, but this time it's different. The Bitcoin halving. It happened. Block rewards were cut in half. Emissions dropped. That part's familiar. Historically, that's been the ignition switch. Roughly 6 to 12 months after every halving, altcoins explode because Bitcoin's supply squeeze tightens, prices rise, and capital overflows into everything downstream. But this cycle is already breaking the script. Why? Because institutions aren't just speculating anymore. They're building. And when smart money builds, it doesn't FOMO into memecoins. It allocates into infrastructure. And suddenly XRP and HBAR aren't just long shots. They're blue-chip infrastructure assets in an ecosystem that's maturing at lightning speed. The shift in market rotation. Let's walk through the cycle pattern that's playing out right now. Bitcoin pumps, retail gets excited. Memecoins like Pepe and Doge soak up attention. Bitcoin consolidates, smart money takes profit quietly and starts repositioning. Alt infrastructure tokens begin to rise, quietly at first, then violently when retail catches on late. We're in stage 2 right now. Bitcoin dominance is high, but starting to stall. Retail is distracted chasing TikTok pumps. Meanwhile, wallets linked to institutions are rotating into XRP, HBAR, XDC, and ALGO, tokens with real-world use cases, regulation-friendly design, and macro alignment. This is how market structure always plays out at the start of the next leg. And it's exactly where we are. XRP is holding its line, and that line is everything. XRP has spent the last few weeks flirting with and now holding the $2 level. That's not just a price tag. It's a psychological barrier, a former resistance that has now become a foundational layer of support. When a token like XRP flips a multi-year resistance into support, it's not a fluke. It's a signal. And what do we see backing it up? Low volatility during dips, which suggests accumulation, not panic. Shrinking exchange supply. Fewer XRP tokens are available for trade. Rising ODL corridor activity, especially in Asia and South America. Translation: whales aren't dumping. Banks are testing. And the big players are preparing for what comes next. DNA HBR is quietly waking up. HBAR, on the other hand, has gone from 13 cents to over 15 cents, which sounds modest until you zoom in on the context. Because this isn't just a bounce. It's a rebound off a key technical base that's held since early 2024. It's happening with increasing on-chain activity, particularly among wallets linked to corporate nodes and council partners. It's gaining traction at the same time Hedera-based stablecoin infrastructure pilots are quietly going live. In other words, the price looks boring, but the data doesn't. HBAR is a sleeping infrastructure giant that's starting to stir. And the volume behind that move isn't retail, it's institutional. On-chain clues most traders ignore. If you want to see what's really happening, forget the candlestick charts for a second. Look at the on-chain signals. XRP wallet activity from institutional corridors is increasing, while exchange wallet outflows are growing. That means fewer traders, more strategic holders. HBAR governance node activity is seeing increased transaction throughput from corporate partners, suggesting production-ready use cases are entering live environments. Stable hodling behavior across both chains. You don't get that in meme coin cycles. That's not hopium. That's the behavioral footprint of smart money. And they're not buying because it's trending. They're buying because it's time. Why timing is everything. Let's put this plainly. If you wait until XRP is back at $3, if you wait until HBR has cleared 20 cents and is on every headline again, you're too late. Because that's when the institutions who are already buying right now will be unloading into your excitement. This market moves in waves of attention. And right now, attention is elsewhere. Which means opportunity is right here. XRP and HBAR are being picked up by smart capital not because they're cheap, but because they're essential. They are the rails and the infrastructure of real finance. And the moment the macro money begins to flood in as regulatory clarity improves and Bitcoin dominance stalls, the tokens with real-world utility are going to be catapulted forward. That's not a maybe. That's a historical pattern, playing out once again in slow motion. If you're still judging XRP and HBAR by how fast they pump, you're thinking like a trader. But the real money is thinking like a builder. And when builders accumulate, they do it before the headlines. So if you're holding XRP or HBAR right now, understand this. You're not just holding a token. You're holding a time-sensitive opportunity to front-run a shift that could redefine how value moves globally. And the window to position before that next leg. It's open, but not for long. Legal clarity, institutional confidence, and regulatory momentum. This is where everything begins to accelerate. First, XRP's legal clarity. The SEC case didn't just end with a technical win. It redefined precedent for how digital assets with utility are interpreted by regulators. Ripple's partial victory not only gave XRP legal breathing room, it became the litmus test for institutional entry. Since then, we've seen traditional banks exploring ODL integrations, government entities using Ripple's tech for CBDC infrastructure, a surge in tokenization narratives around real estate and commodities on XRP Ledger. XRP is no longer the lawsuit coin. It's the compliance-friendly settlement rail that governments can now reference legally. Now, Barr's enterprise-first approach. Hedera never needed a lawsuit to prove legitimacy. From day one, it's been structured with governing council oversight, including Google, IBM, Boeing, and more. And now, the U.S. Treasury, the Federal Reserve's TCH initiative, and multiple international governments are exploring tokenized compliance systems built on Hedera. Even more quietly, real-time carbon credit settlement and supply chain compliance contracts are being tested with HBAR as the Layer 0 validator token. In a world that's rapidly regulating stablecoins, token flows, and digital asset identity, XRP and HBAR are already ahead of the curve. The technical setup that no one's watching but smart money is XRP technicals as of today. Support holding firmly at $2, with a rising trend channel targeting $2.50 short-term. Resistance, $2.18 to $2.21 range is key. Multiple rejections here since March. RSI mid-60s and climbing. No bearish divergence. This is a continuation setup. HBAR technicals. Support. $0.139 is the must-hold level. Below this, we risk re-entering the 2023 range. Current resistance. $0.154 to $0.163. A break above this confirms a trend reversal. Momentum. Increasing volume without overheated indicators. Smart money accumulation is visible on-chain. But here's the secret smart traders are watching. On-chain flows show fewer outbound transfers from long-term HBAR wallets. XRP ledger activity has shifted. More movement between institutional wallets, less between retail. These are the hallmarks of a pre-move rebalancing. And they tend to happen before the breakout, not after. Don't wait for Twitter influencers to call the pump. Tokenomics, scarcity, and real-world adoption. Let's break this down. XRP. Supply 100 billion, but over 48 billion are locked or held long-term by Ripple and strategic partners. Use case. Instant liquidity via ODL, bridge asset for CBDCs, and tokenized asset rails. Key insight, with ISO 20022 now globally live, the pipeline for XRP integration into messaging and settlement systems is wide open. HBAR. Supply 50 billion total, but under 35 billion in circulating supply as of now. Use case. Enterprise smart contracts, carbon credits, and tokenized identity for regulatory frameworks. Key insight. As compliance requirements rise, Hedera is energy efficient. Permissioned consensus gives it an edge over proof of work and even Ethereum. But adoption is more than theory. HSBC, Standard Bank, and Shinhan Bank are already exploring Hedera-based tokenization. Ripple is running pilot programs with central banks from Asia to South America. And behind both of these projects, a scarcity narrative that isn't based on hype. It's based on real-world demand for settlement, validation, and compliance. How smart money is playing this and how you should too. Whales are already moving. Watch what they do. XRP wallets with 10M tokens are increasing, not decreasing. Bar's top 100 wallets have shown net accumulation over the last 30 days, even during drawdowns. Here's how smart money plays this. They accumulate during silence, not hype. They use volatility to increase position size. They think utility first, not meme first. If you're holding XRP or HBAR, here's your checklist. Dollar cost average during red days. Set alerts at key technical levels. $2.22 for XRP, $0.163 for HBAR. Pay attention to institutional partnerships, not influencer tweets. Stop comparing these tokens to pump and dumps. They're infrastructure. The utility is real. The demand is coming. And the shift is already underway. XRP and HBAR are no longer optional, they're infrastructure. We're watching the invisible rails of finance being built in real time. And guess what? XRP and HBAR are quietly being embedded into it. Central banks want compliant, efficient value transfer rails. XRP. Enterprises want green, scalable, programmable ledgers. HBAR. This is your signal. This isn't 2021 speculation. This is 2025 infrastructure, and you're still early. If you made it this far, you're not here to gamble, you're here to understand the system being built. Smash that subscribe button, drop a comment with your thoughts on XRP versus HBAR, and make sure your notifications are turned on, because next week, we're diving deep into how these tokens are quietly winning over governments and banks behind the scenes. This is Be Crypto Smart, and this is the kind of edge most people will only realize after the charts explode. Stay sharp.